Do you own Tesla shares? If so, find out how this investment will turn out. If not, find out if this is a good project or not. Follow us and keep an eye on the details. Electric cars or EVs are something that previous generations could only dream of. AI-powered vehicles are an amazing idea in the early years of civilization today. Artificial intelligence or artificial intelligence has become to some extent a normal part of people's daily lives. However, a lot of people were investing in shares of Tesla, the well-known leader. Today's video finds out why Cathie Wood said the Tesla sell-off is over. Tesla is an American automotive and clean energy company that designs, develops, manufactures, leases, and sells electric vehicles and energy generation and storage systems in the United States and other parts of the world with futuristic and environmentally friendly goals. Tesla has become a name known all over the world. As we mentioned, you will know why. Cathie Wood said that the Tesla sell-off is over. But first, what is the sell-off? By definition, a put means the sale of assets, usually at a low price, carried out to dispose of them, rather than a normal trade or simply selling stocks, bonds, or commodities, especially those that cause a decline in price. A sell-off occurs when a large amount of a security is sold in a short period of time, causing the price of the security to fall in rapid succession. With more shares being offered than buyers are willing to accept, price declines may accelerate as market psychology turns pessimistic. Aptiv Shanghai factory suspends some shipments after COVID cases emerge. This title, brought by unexpected circumstances that spread around the world, affected the stock market not only of Tesla, but also of other companies. First, this is a company that ships parts to Tesla and General Motors, which was suspected because two of its workers were infected with the COVID-19 virus at a time when work was suspended since China and its capital, Shanghai, were strict when COVID cases spread widely around the world. Around the world, most factories in the aforementioned country were closed for several weeks, while some took months and eventually struggled to catch up when they started operating again. Although they eventually managed to keep up, the process of lagging took its toll on Tesla, as the long-term lockdowns also affected the export process. This in turn affected the economy and thus affected the stock markets. In other news, which will certainly make Tesla owners feel good about their investment, the current Indonesian president announced a plan to meet with Elon Musk to talk about nickel, a raw material that can be used to make batteries. This is important and relevant at the same time, because when it comes to electricity companies, there have been many issues related to supply chains, and this fact is that the Indonesian president is planning to meet with Musk to talk about Tesla and potential nickel supplies. Just imagine how useful it would be if that came true. Who is Cathie Wood, and why do her words carry weight? According to Forbes, Cathie Wood, an American investor, star stock picker, and founder, CEO and CTO of ARK Invest, a $60 billion company that invests in innovations such as self-driving cars and genomics. Cathie Wood is often called the most underrated investor in the game, as not only is she incredibly persuasive in her investment arguments, but she's also got the proven results to back up her surprisingly distinctive claims. Cathie Wood provides monthly updates on things like monetary and economic policies, innovations, what to expect in her area of expertise, and commentary on Fed decisions. The Federal Reserve System, commonly known as the Fed, is the central bank of the United States that regulates the monetary and financial system of the United States. In a recent video posted by Cathie, she stated that the Fed's move to raise interest rates by 50% was wrong. Additionally, it stated that the United States is likely to enter a recession because Europe and China are currently in recession. For this reason, I considered the move to raise interest rates to be wrong because it is not the right time, because there are great pressures on the global economy and within the United States. Cathie also mentioned that our company valuations now, if you look at it from different angles, are lower than those of the Nasdaq. As I mentioned, we don't believe the Nasdaq, and certainly not the Nasdaq 100, includes enough opportunities for disruptive innovation as our strategies do. Regarding monetary and financial policies and economic market indicators, she said that the Federal Reserve's decision to raise interest rates to 50 basis points would be a mistake. Moreover, she said markets support and agree with the idea that the Fed is making a mistake. According to her, the stock market experienced a convulsion. The S&P fell 15% from its peak. On the other hand, the Nasdaq is down 25% from its peak. Pure play innovation strategies like ours have fallen to between 60 and 75%. So this isn't just a cramp. Twitch said. Will such words from Cathie Wood, known for her knowledge of the investment industry, worry investors? She also stated that if people think that substandard innovation companies are witnessing the end of their world, then that is not far from the truth. Wood added that the tendency to move towards standards in risk-free environments represents a major inefficiency. It is ironic that the genomics revolution, blockchain technology, and crypto assets behave exactly the same. In fact, crypto assets began to correlate significantly with the Nasdaq starting at the beginning of COVID. Before that, there was no connection at all. So we think this is an anomaly, a massive anomaly that will be corrected over time, and the inefficiencies will be introduced back into the market. Before we continue this video, make sure to hit the like button and the notification bell to receive more of our videos. Looking back at the stock market in its current state, it is believed that a recession could occur in the United States. A recession is defined as 2 consecutive quarters of decline in gross domestic product, with the country having already seen one, and one appearing to be on the horizon in either the second or third quarter. Suppose the result was positive in the second quarter, but turned negative in the third quarter. In this case, technically it's not a recession, but it will be close enough. There are a lot of inflation-related headlines, and there have been huge supply chain issues caused by China's coronavirus suppression policy, as well as the Russian invasion of Ukraine. For these reasons, PPI inflation rose to 11.2% year-on-year, while the CPI rose by 8.5%, and the personal consumption deflator rose by 5.2%, and the measure the Fed pays the most attention to is the consumption expenditure deflator. Basic personal, or from basic to basic. Consumer spending deflators, with the exception of food and energy, which they consider to be highly volatile. More volatile than core inflation is 5.2%. At the end of the video, Wood said that innovation solves problems may become a new slogan. This is consistent with margin deterioration that could bring disappointing profits to companies that don't control their expenses, but can be solved with more automation and increased productivity, she said. Adopting innovative strategies may be a way to reduce costs and maintain margins. Tesla or Tesla stock is still overvalued, at least from a traditional standpoint. However, there is more to it than just its profits and market value. Tesla has been fundamentally overvalued for nearly a decade, and its value continues to rise. However, recently, Tesla shares have declined significantly. It currently sits at $724.37, down 5.88%. However, it is worth noting that there are a lot of factors that influenced this drastic decline, and Tesla is not the only company experiencing such a downward slide in the stock. This has been caused by a lot of unforeseen and unexpected events all over the world. The COVID-19 pandemic has affected manufacturers greatly. The war between Ukraine and Russia also affected the economy. However, the following information proves that Tesla is still at the top of the electric car or EV industry. On December 28, 2021, Musk disclosed Tesla stock sales totaling $16.4 billion since early November, equivalent to approximately 10% of his stake in the company. On March 22, 2022, Tesla officially opened its German factory near Berlin, complementing car assembly plants in Shanghai, Texas, and California. Furthermore, on March 28, 2022, Tesla revealed plans for a stock split contingent on shareholders approving an expansion of the authorized number of company shares at its 2022 annual meeting. On April 20, 2022, Tesla announced first quarter 2022 net income of $3.3 billion, a quarterly record exceeding Wall Street estimates, as revenue rose 81% year-over-year to $18.8 billion. According to a recent article in Barron's Magazine, an American weekly magazine covering U.S. financial information, market developments, and related statistics, now is a great time to buy Tesla shares. Although some analysts are predicting a collapse, while others are predicting gains of more than 100%, the debate is still far from settled. But there are two metrics that make shares of the electric vehicle leader look unusually attractive. If you liked this video, visit our channel and watch our other videos.